everybody, welcome to Forex Trading Analysis. It is 10:30 p.m. on May 27th. Today we're going to be looking at a few pairs, but before we get started, quick risk disclaimer. As foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So the pairs I want to take a look at today are the US dollar pairs. Kind of been in a boring sequence of events, so I'm not going to be looking too much at the some of the main pairs, but I do want to talk about a few daily charts that interest me right now, because there's really not too much opportunity that I see currently in for most of the pairs. But the few pairs I want to take a look at are, first of all, the Euro Aussie, which is currently just below the 200-day moving average, and this pair has been in a downtrend for quite some time. If you follow this pair at all, you know that swinging down from the highs back in 2001 this pair used to trade above 2, so this pair has been in an extremely strong downtrend for a long period of time, and the fact that we are just below the 200-day moving average is an important sign for me that that resumption to the downside may be in the works to continue. I don't like to trade low probability trades, and this is an extremely high probability trade, so the risk for this pair would be the 200-day moving average, possibly the open of the highest or the largest bar down, which is 1.29111. Those are nice areas to define your risk, but other than that, it does look like a pair that is in contention for a downtrend to continue, and definitely with euro weakness, it is going to be a pair that could possibly be looking down to definitely the 100-day moving average and possibly below these lows at around 1.2197. So yeah, definitely a nice pair that you can be looking at over the next few days. I think we may again reach down to the 100 moving average. If not, and we do break above the 200, then I would close this trade, because it is possible that a long-term uptrend is in the making. But for now, it looks to me that downtrend is a possibility, and a nice place to define your risk here at the 200-day moving average. So that's one thing I want to take a look at that pair. The other pair that I want to talk about is the US dollar yen, which I said for a while ago would extend into a range, and we have kind of been seeing that over the past few days, past few weeks actually. We're bouncing around between the 200 and 100, and the pair seems kind of to be reasonably priced. The thing with the yen is that it does tend to range for a little while, so just a caution that if you are in yen trades, the short or the bottom, I would hold these for a little bit longer than you think. If you're thinking of closing just because we close above highs, possibly the 100 or 200-day moving average, or if you close because we close above the high, if you close a short because we close above the high here at 80.356, or the low here at 79.003, I would hold these a little bit longer, because the yen is a type of pair that does like to range and then have moves one way or another. So I think that in the next couple weeks we could see another strong move either to the upside or downside, but for now I think the range is going to be a predominant characteristic of this pair. And so no trades yet from me, but in the next couple weeks, if I do have a bias about whether it's going to push to the upside or the downside, then I will let you know. One thing that is important is throwing out a Fibonacci of this recent up move, which shows that we are just above the 61.8, which is a big level, and we failed to break below that over in the past break. So if we do see a resumption to the upside, I definitely be looking to enter a long trade if we do reach above the 100-day moving average, and possibly even the highs here at 80.356. So again, a nice pair. No trades yet, but pair that I will be looking to enter something in the next few weeks. Last pair I want to take a look at is the US dollar Canadian, which didn't gap down today as far as some of the other ones. US dollar Swiss gapped down a little bit further, and that to me is an indication that this pair is a little bit stronger than the others, or the maybe Canadian dollar is a little bit weaker than the Swiss franc right now. But I think part of that reason is because it does look like we are going to test the 200 week moving average. Uh, all in all, that's going to be around a 310 pip move, and if we do see up to those highs, I think it could be choppy up until then, but it's going to offer some nice profit potential. And currently the pair is overbought, which is a signal for me that a look to the downside is that I'll be looking to the downside for the pair. But if we do start to reach down to the 200 and 100 day moving averages, as well as this is going to be a big level for me, close of this bar at 1.01763. Those are going to be huge levels that people will be looking at a lot for a rotation back to the upside. And it does look like, just based on the fact that we didn't have a huge sell-off today, like over the weekend, like some of the other pairs, this is going to be a pair that we'll be looking to push back towards the upside. So that's what I see from these three, and hopefully we'll have a few more interesting outcomes over the next couple weeks for more pairs, because like I said, it is kind of a boring day. But that's what I have to say for these three pairs. Thank you very much for watching. Please follow us during the week at SynergyFX, and good luck trading.